right. Good morning. FXStreet. All right, let's get on with it, beautiful people. Oh my gosh. Look at you. Gorgeous. I'm telling you, gorgeous. Good morning. Welcome to Trade Non-Farm Payrolls Live, a collaboration between FXStreet, FX Bootcamp, Traders Way, and a whole bunch of other people that love and care about you. That being said, this is a tough gig, bro. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonell. I've been trading currencies for a long time. I've been doing this monthly webinar live stream now with FXStreet for more than 16 years. And before that, I was presenting stuff at FXStreet, which means I'm been doing Forex longer than your other YouTube guru has even been alive. Pretty good. So thank you for FXStreet for being here all these many years. What an amazing resource for those that care about FX. So much help for so many years. So bravo to FXStreet. Thank you for hosting this webinar for the 198th month, which means what? December is number 200. How nice is that? Maybe I should bring balloons. So our rules of engagement is check your negativity at the door. Ask questions, get involved, let me know how I can help. I consider myself a servant in our relationship. Let me know how I can serve you. The raison d'etre is that I want you to become a successful Forex trader. Because I'm a capitalist pig dog and all I care about is money. Hey, well, better than a socialist pig dog that cares about ruining you. Anyways, cool. I've done a few things over the last 20 years of teaching Forex and trading Forex. I wrote a book, Strategic and Tactical Forex Trading. You can find that on Amazon.com. I have dozens and dozens and dozens and dozens of hours of video training courses for you. Macroeconomics, monetary policy and central banking, day trading, swing trading, trader psychology, dozens and dozens of hours. It's all really good, I promise you that. And it's a whopping $88 for all that education. So you can find that at FXBootcamp.com. If you need a foreign exchange broker, and I know you do, I would recommend, or I do recommend, TradersWay.com as an ethical, trustworthy foreign exchange broker that I believe wants to develop a symbiotic relationship with you. They don't want to just book you and trade against you like so many brokers. They want you to succeed. They value your education. They ask me to help you so that you can become a conservative, disciplined trader that might actually learn how to trade properly so that you can trade successfully for years and years and years and years and years, and they can provide a service to you. Fast execution speed and narrow spreads. Yeah, there you go. TradersWay.com. My background, before Forex, I was a venture capitalist. Before that, I worked in the high-tech industry of the Silicon Valley as an entrepreneur. I worked at tiny little companies called Cisco Systems and Apple Computers. I owned Apple shares at $6 per share. I know, right? That's why I'm beautiful. Before that, I worked in the nonprofit world, sat on a board of directors with George Soros. Yeah, no, that ain't BS. Yeah, you're like, wait, the guy that broke the Bank of England? Yeah, I was on the board of directors in 1995. Yes. Along with a representative from the United Nations, the vice president of Arthur Andersen, the vice president of GE, the president of AT&T, and me. And there were a few others too. Better looking, smarter people than me, but somehow I squeezed into the room. So that's it. Oh, and I had a paper route. Oh, and I worked at NASA. Some people like that. You worked at NASA? Yeah. Ha! Yeah, just a little bit. But anyway, so I don't know. I bring all that baggage with me, good, the bad, and the ugly. So there you go. There's the full disclosure. I guess I'm drinking out of a Harvard mug. So I have a bachelor's degree in macroeconomics from Harvard and a master's degree in financial management, also from Harvard. In my postgraduate work, I did alternative investing at Harvard Business School. I did cryptocurrencies with Gary Gensler at MIT. He now runs the Securities and Exchange Commission. And I did the algorithmic trading program at the University of Oxford in England. But besides that, I'm just another YouTube guru. So again, I think you're the boss, so just ask questions and you get to dictate where we go today. Now, I'll go over a high volatility event-driven strategy. That's what's going to happen when the news comes out. Okay. Here's the problem for most people today. You're going to see the news comes out good and you think it's going to be good. Or the news comes out bad and you think it's going to be bad. But I'm pretty sure today the good news would be bad and the good news would be good. And you're like, I don't get any of this. This fundamentals are mumbo jumbo to me. Well, there's your problem right there. You think today's event is fundamental. It's not. Today's event is news. So we can go over that if you want. I'm going to show you a few things today, like I did last week, to give you sort of better resources to make better trades. Okay? Cool. Okay, what I call my super secret, fundamentally based alert service, because I actually haven't launched it yet. Now, some of you signed up last month. That was the first time I showed anybody. We'll use it today, just so you know. But anybody here? Yeah, not yet. Has anybody played around with my super secret, fundamentally based alert service? Any initial thoughts? All right, just trying to get these glasses clean. They're still dirty. Come on, Tom Ford. I think it's the lenses. Like, no matter what you do, you can't get the lenses clean. Jim says, yeah, it's pretty awesome. Yeah, I think so too. In fact, I was actually dreaming last night of building different tools with it. So, okay. Yeah, it is super secret, Kevin. Yeah. All right. So anyways, we'll get to that. You'll see it. Don't worry about it. We did use it last night in a discussion at FXBootcamp.com. Somebody wanted to short this, and I said, well, you know, I see what you're thinking, but not now. And there's two parts of the see what you're thinking. Well, nothing on this chart that we're looking at says down. Nothing. But fundamentally, there is some rationale for this to come down. So when you line up fundamentals with technicals, the fundamentals might be there, but the timing would be wrong. So not yet was the answer. But it's not a bad thought, but it's not likely to happen technically. Technically, this is still incredibly bullish. So then you might say, well, why would you even think about selling this? Well, how about what if I said this? If you studied the last 5 years, you would see that it turns bearish right about now. But then you're like, Wayne, but the Fed's been manipulating the market over the last 5 years. Maybe that's not happening anymore. Okay, so you look at Aussie Kiwi over the last 20 years. And every time, statistically speaking, it starts to come down right around now. Would that influence your thought process? And you're like, well, it still doesn't mean it'll come down today or this year. Oh, I agree with you, but wouldn't it be nice to know that the 5-year average and the 20-year average of seasonality says, get ready, this is about to fall? Wouldn't it be interesting? Could be interesting. Could Swiss franc cause a debacle? Could Credit Suisse cause a franc debacle? No. Okay, that would be news, irrelevant. Okay, what else? How could the central policy in Japan and England affect the pound and currency pairs? Well, that's just monetary policy, right? Like, what do you mean? It's obvious, isn't it? Anyways, we'll get to that later, but okay. What you're saying to me is you don't understand monetary policy. Okay. Again, there's courses for that I would recommend at FX Bootcamp. Are you taking a live trade? Do you want me to? Okay. There. I just placed a live trade. Anything else? Aswan, you feel better now? Let's see where we are. Okay, I'll take my 1 pip loss. So I'm sitting on 400 pips from Tuesday. So today's Friday. I've been in these trades since Tuesday, I think. 06. So I'm still going with that. Yeah, dry, real dry. Yeah, Kevin, well, we have intervention on both of those banks and the currencies have moved. So, yeah, is the answer. Yes, could central bank policy at two central banks that are intervening, could they impact their currencies? Well, again, the answer is like, yeah, of course, that's what they're doing. So what you're asking is, Wayne, can you explain to me yield curve control from the Bank of Japan and their policy of quantitative and qualitative easing? Oh, yeah, we'll talk about that later. Okay, right now I want to get us set up for non-farm payrolls. And let's just cover that quickly because I can get lost in thought. There's lots of fundamentals and stuff we can get through. Let's go here. Okay. I guess we can use pound. This is fine. Pound dollar. We're doing no. You know what? You guys are probably no. Let's do euro dollar. Let's do euro. All right. Let's do euro. So I shorted euro up here, and there hasn't been much better trades. Obviously, here's one. Okay, that's covered in my day trading group. We had that nailed a million times, right? So that's obvious, you know. Now we have a new lower low. Okay, so now all of this is dead. None of this is real anymore because we're going to have a singularity in the price-time continuum. What is a singularity? It's a spot in the space-time continuum in which the rules of physics do not apply. So singularity in the price-time continuum is where fundamentals and technicals don't apply, those rules. Non-farm payrolls will be released. Whatever the number is, there's going to be confusion. Okay. Why do gurus like you sell the secret? Why not just... Oh, I don't sell any secrets. Martin, put it this way. I mean, it's a fair question, Martin. And then don't get me too sidetracked here. I am not trying to beat the market. I am not. I don't believe Forex in particular is a zero-sum game. I believe it's a symbiotic dance, Martin. Left, left, right, right, back kick. Okay? That there are bulls and bears, and we must move accordingly. Bulls will do what bulls do. Bears will do what bears do. And in fact, I believe we could both make money. Okay? So I don't look at it like I got to beat the market. I don't need a secret. I'm not bigger than most institutional investors. I'm not smarter. I might be better looking and more modest, of course. But like my Ivy League degree on Harvard is average. There's nothing special about me. So I can't beat the market. But I do understand what the market's going to do before it does it. It's because I know the dance. If I move my left foot forward, you should move your right foot back. And therefore, nobody gets their toes stepped on. So in that case, Martin, I'm sharing the way you should be trading so that we are both trading, let's say, in the same direction and not against each other. I don't want you to step on my toe. Okay, Martin? Okay, now if you're going to be rude, you could disappear. Okay? All right, so we're just going to move on then. Here we go. When non-farm payrolls comes out, the market is going to move. We know there's going to be volatility. So it's going to go this way or that way. Okay? Now, I wrote an article in FX Street many years ago. Okay? And it talked about the two ways to trade this event. In fact, it actually tells you how to model non-farm payrolls so that you understand how they get to the numbers. Okay? So, again, I hope you've read that information. It's been there for years and years and years and years and years. Okay? So I hope you read that. But the thing is, I want you to realize that probably whatever the number is today doesn't change a thing. So how would you feel about that? I want you to put yourself in that mindset. Probably. Now, this can come out way low or way high, but probably not. I don't think it's going to come out 100,000. I don't think it's going to come out 400,000. I think people are thinking 250, 3. It could be 200, whatever. So we'll say somewhere between 200 or 300. And it won't make a difference. It doesn't change anything at the Fed. Okay? In that case, then whatever happens with the volatility doesn't change anything in the longer term. So if you are a bull and you believe euro dollar is going to go up anyways, I'm not talking about this 5-minute chart now. I mean, you go out to like a 4-hour chart and you say up or down. We know the targets for the month of October. This is just goes without saying obviousness. Okay? If you're a bull, you believe we're going to go to 104, 105. If you're a bear, you believe we're going to go to 93 to 92. These are facts. If you don't know that, you don't know how to trade with pivot points, at least. Okay? Martin, I've been doing this for 20 years. As you can see, I have an army of people that back me up. Why is that? Maybe I'm different. I don't know. So I get that you're jaded, but it's not helping you, and it's certainly not helping anybody else here. So like I said early, check the negativity at the door, and maybe we can become friends. Now, alone, everyone else is thinking it. Martin has the guts to at least say it, but now he has to, no, I don't say ignore him. I don't say block him. Okay? But he does need to change the tone. But nonetheless, okay? So look. If you are a bull, this is the trade plan for the month. We've known this for weeks. That is the trade of the month of October if you are a bull. And by the way, historically speaking, that's what I would be doing. Okay? I'm telling you, almost every year I can think of, that's what I would be doing. But I said in January, it's not going to work this year. I said that in January. I went month by month by month, what I thought the markets would do, like the stock market, what it would do every single month. January, February, March, April, May, June, July, August, September, October, November, and December. And I haven't been that wrong. Okay? Pretty reasonable, okay? So let's zoom in here. So normally I would be doing that. I normally would be taking a trade that looked like this. And therefore I know people are going to disagree with me, which is fine. Okay? I could be wrong. Historically, I'd be wrong with my point of view here. But at least I'm short making money. It's the best way to be wrong. So there are people that will react like this, trading this way when non-farm payrolls comes out. So if you're one of these guys, and again, I don't know if you're wrong. I'm not saying you're wrong. I'm just saying I'm short. You want to be long. Where do bulls buy? Bulls buy here. Bears sell there. If you don't know that, then join FX Bootcamp because you have a gap in your knowledge. Don't worry, we can fix the gap. It's not terminal. It's just knowledge. I could show you. It's okay. I've been doing it for 20 years. I've showed a lot of people. Okay? So it's just like, boom. You just got to know this stuff. So a bull's going to buy here today, guys. And where else would a bull buy if a bull was going to buy based on technical analysis? Well, they're going to buy a bottom, aren't they? So if you were a bull, I would plan non-farm payrolls like if non-farm payrolls move the market down, then a bull you might want to look to buy. Because bulls buy low. Now, I'm a bear, so I'd love to keep it below this, okay? Now, there's a high probability I get knocked out anyways, but this is where I'm going, okay? So I'm going to move my limit order here. This limit order, I think, was 333 pips. It's not enough. Oh, that's 500 pips. Oh, sorry. Whoops. All right. So I'll move my stop to 650 pips profit. Not my stop, my limit. I cannot lose money. Sam, I am. Journey to Legacy says, I don't trade like this. Well, it's just a high volatility event-driven strategy. I rarely do it anyways. I rarely do. I only really do it here. I'm not a news trader. I'm a fundamentally based macroeconomic trend trader. I love technical analysis, and I'm not bad at it either. But I do focus on the fundamentals, faux show. And after 20 years of working really hard at learning how to trade Forex, I am 100% convinced if you don't understand fundamentals, you won't make it. And by 100% convinced, I know for a fact I'm not wrong. I know you can trade knowing no technical analysis whatsoever. I love technicals. I think it would be stupid to trade without it. But like I said, I sat on a board of directors with George Soros. He broke the Bank of England. He's probably the most famous foreign exchange trader of all time. He doesn't use technical analysis. So I know you can do it without technicals. I think it's dumb, but it can be done. I say you should have a healthy knowledge of both. Anywho, so I'm a bear here. There's other places to sell, and I hope we don't have to go there today. If we go up here, I'll probably just walk away and regroup next week. But that could be a sell, that could be a sell. And of course, this is the current sell, and I'm already short there. I hope we don't do an up today. But it would look like this for me next week anyways. Global Guy says technical analysis versus what? What's the other option? Fundamentals. Okay. That's it. Macroeconomics. Okay. Fundamental analysis. It's different words for the same thing. There's two parts of that. Why is money leaving Europe and going to the United States? That's macroeconomics. But the other policy here is what is the central bank in this economy doing? And those actions, do they strengthen the currency or weaken the currency? Well, right now, the answer is strengthening the currency. So I'm a bull. I don't even need to look at a chart. I'm a bull on the dollar. Okay. And I don't know anything about euro. Let's just say I don't know anything about the euro, but I do want to buy the dollar. Why? Because I understand what's going on at the central bank. That would be fundamental. Well, what are the indicators that the central bank is using to determine that policy? Well, the Central Bank of the United States, right, is looking at GDP growth, inflation, unemployment, interest rates, and they're making a policy to get an outcome that they want to achieve. That just so happens to strengthen the currency. You can look at the interest rate differential and find out there's a 2% bias towards the USD. If you sell Euro USD, you will get paid 2% a year. That's really cool. So somebody might just sell this just to pick up the income. Well, so the first part of my analysis is the fundamental analysis of economic data. But then there's this idea of the money magnet, money driving towards interest rate yields. Okay, but what about fundamental analysis of institutional investment positions? Okay? 74% of institutional investors are long the dollar. And 46% of institutional investors are short euro. So there's a slight bias to selling euro dollar. Based on what? Institutional positions. This is the smart money positioning. And of course, dumb money's the wrong way. Dumb money's buying this. Why? They're not really dumb. What's happening? Well, it went up for a few days, so they're buying it, which of course they're wrong. So most likely we're heading this way. But that's why I sold it here. If you do technical analysis, so now we're doing technical analysis, it says base case, worst case, best case, right? Or let's say worst case, base case, best case. If you project the current technical trends forward, you get to these numbers, which of course is down. So you got to do technical analysis and throw that into your analysis. And then you want to look at things like fundamental analysis of market norms. What has happened over the last 5 years for euro dollar? What's happened over the last 20 years for euro dollar? And incorporate that. So this month tends to be down. Next month tends to be up. So can I be down this month? Yep, but then you're going to face some headwinds next month based on historic norms. And so you take all this fundamental analysis and you put it into a scorecard and you're like, this favors dollar, this favors dollar, this favors dollar, this favors Europe. This heavily favors dollar, this favors dollar, this favors dollar, this favors dollar. Add it all up and you should probably be selling this. So therefore, a day and a half ago, I sold this and I'm up 150 pips. Oh, really? Well, of course. It's not that surprising now, is it? So you need to go into this event, which is just another number, but it's not going to change any of that other stuff, probably. So what I would like you to do, and it's the basis of the article I wrote, I probably wrote it 10 years ago for FXstreet, but if you're a bear, you probably still want to get short, even if this goes up today, even if it goes up for 3 days, you probably still want to sell it. Unless the number is so radical, it's going to change the policy at the Fed. Well, I don't know about that yet. Okay. What do you guys think of that tool I just showed you? That's my super secret, fundamentally based alert service. Marina, how you doing? M&M's in the house, everybody. Great. Okay. Would you like a sample copy of a report? It goes through multiple currency pairs. It goes through the stock market. It goes through gold. It goes through oil, many dollar pairs. It gives an overview of the entire positioning of retail and institutional report, right? It goes over strong versus weak. It does a scatter plot of the entire market to show where everything is positioned, not just in price, but in prediction based on the scoring. Would anybody like a free copy of that? You can just take a look at it and see all the pretty colors. Yeah, no one from Yale is allowed to use it. Princeton, maybe, but It's going to get hot in Cape Town. Better get your water bottles filled and stored. Okay. Thank you, Ramon. Clemson, huh? Southern girl? You Southern belle? Okay, so that's that. So what I was saying here is the news is going to come out. We're going to get volatility. It's going to go one direction or the other, and you can scalp it. The second thing that I really want you to do is if you're a bear and it's skyrocketing up, look for the counter trend trade back in the direction you believe we should be going. Okay, so there's like the scalper's going to trade the way it is going, and right, and other traders are going to trade where it should be going. So if NFP brings this down and you're a bull, wait for a reversal pattern and do the counter trend. Don't chase price, let it reverse at obvious support, or if you're a bear, at obvious resistance. Okay, so you either chase price by scalping. I've only taught it for 197 months, so I think you should know it. And the second one that I want to point out more is the counter trend trading back in the direction of your bias. Okay. Kevin digs the currency strength chart, the one where it ranks all the pairs from strongest to weakest pairs. Yeah, 39 different assets ranked fundamentally in real time. Yeah. Yeah, so everything, right? Okay. Oh, kindly predict gold. Okay, why does gold go up or down? Let's do a pop quiz. Okay. Oh, good. You in a nice price. Good. That's a great price. Okay, why does gold go up or down? Yeah, Raymond. Well, yeah, let's be a little more esoteric than that, because, well, that's true. Anything. Right? Okay, what do you think? Dollar strength and weakness? Not all of it. Yeah. I mean, Raymond, it's like saying, like, well, because it's God's plan. Well, I don't have a response, right? Like, okay, all right. Yeah, because it's it's the answer to everything, right? But you're not wrong. It's just, yeah. There you go. That's what Rail says, right? Inflation. Okay, good. So why did you buy it? Why did you buy it if you believe it's a hedge for gold? Or that gold is a hedge for inflation? No, I'm asking why. I don't care what your prices are. Who cares? Come on, dude. Why'd you buy it if you believe it's a hedge against inflation? What's up, J-Man? Okay, that's not an answer. So again, you're trading it technically. Okay. But you don't know why you're doing it. Okay, well, we have a deflationary scenario. You're like, but Wayne, we have 8, 9, 10% inflation. Yeah, but we have central banks that are trying to bring inflation down. So there's my thought. We're in a deflationary period. If we go, you're like, Wayne, that's insane. Well, our inflationary period occurred over here. Do you remember? Remember that period? The acceleration from this year period, that's COVID. So this is, right, high demand from a roaring economy. Then we had an economic collapse because of COVID. And money flow around the world essentially reversed. Things that should be strong were weak. Things that should be weak were strong because of the reversal of capital flow from COVID economic closures. For example, in here, the Bank of India filled their vaults with more gold than the entire history of the central bank. Do you think that had an impact on the price of gold? India never owned so much gold. Same thing with Israel. Many, many, many central banks around the world purchase gold to combat the reversal of capital flows. And then they stopped. Okay? Then we get to a period here, and what starts to happen around the world? Interest rates start going up. Not in one country, in all countries. Why? To kill inflation. So your YouTube gurus are telling you you should buy gold because inflation's at 10%. And that just shows they don't understand. They read somebody's book or they listened to their grandpa. You should buy gold to hedge inflation. Yeah, well, we have deflationary pressures right now. So your guru has no idea what they're talking about. None. They think they know, and they read a book somewhere, and now they're regurgitating like a mother bird vomiting into some baby's mouth. Blah! And you're gobbling it up if you believe them. But here's the thing. They also didn't know that the central banks were buying gold like crazy in that period. How many people here heard me explain it over and over and over again, what was happening in that moment? How many people here saw me prove with facts that it was the Bank of India? How many people saw me prove with facts it's the Bank of Israel? So on and so forth. Buying this to deal with foreign exchange risks occurring in real time related to the closure of economies. Yeah. I bet you at the time there wasn't too many other people that knew that. You had to know it. There's so many people here that are taught rules of thumb and wives' tales. And if you don't understand the English there, Google it. You'll maybe get the right, okay? But the thing is, there's lots of half-truths that people believe to be fully true. And it's just they don't actually understand a dang thing. Oh, so, right, in that case, I'm still more of a bear than a bull. Now, of course, this can change, and there are fundamental reasons why that might change, and we might be getting close to that, but I'm not ready to sort of swallow the hook yet. Okay? Okay. Oh, Kevin's on puts, using puts. Yeah, that's cool, man. Yeah. Yeah. All right, cool. So we're not that far away. Who's going to post the number when it comes out? Anybody? Things to watch today. The headline number shouldn't be too important unless it's crazy high or crazy low. Insane profits. NFP expecting bearish news. It could be anything. Remember, it's the government. They take a small sample size and then extrapolate that out to guess what the entire 350 million people are doing in America. Then even the number is dumb. You should only really look at the revisions. So I honestly don't care that much unless the number is just crazy above or below expectations, which, well, would be unexpected. But we want to look at other subcomponents like wage growth, for example. So with the decline in jolts, okay, less companies looking for employees, maybe wage growth, which is at 5.2, it should be at 3. Maybe that moderates. Also, last month, we had a lot of people re-enter the workforce. Is that a good thing? Is it a bad thing? What kind of jobs are they getting? By the way, maybe you don't get an artificial intelligence job anymore, but there are plenty of jobs to bus tables and clean rooms, right? There's still lots of hospitality type jobs out there. So we'll see, right? So we have to look at all the subcomponents, and so we'll do that as well. But if you could post the number, that would be great. I'll pull up the actual report and we can play around with that. You can scalp the news if you want. You can scalp the news if you want to. Okay, so in that case, let's drop into, I'm going to do a 5-minute. Nah, let's do 1 minute. It's very traditional. And I'm going to put this on my scalping setup. Yeah, boy. Kevin says, hey, my humble wins are thanks to your inspiration and guidance. Thank you. Appreciate that. Okay. Bitcoin is not a hedge for dollar. No, that's ridiculous. It's a highly correlated tradable asset. But no, that'd be like... So they used to think that live zero, but that is certainly not true today. So remember, good news is probably bad, and bad news is probably good. So don't look for answers today. You should trade your fundamental bias. Okay? If you don't know what to do, that's your problem. So don't do anything for now. There's no rush. Okay? You know, not one person in the history of Forex has ever gotten rich quick, but you can certainly go broke quick. There's no rush, my friend. Insane profits, we'll do some Bitcoin. We can do gold and oil and Bitcoin. We can do that. What else do you guys want to trade today? Okay. By the way, I want to say it again. Nobody in the history of the world has ever gotten rich quick trading Forex. So you would be an idiot, an embarrassment to your mother to even try. It just means you're stupid. So please don't. Please look at this as a business. You want to build an institution around trading like a professional. J-Man lost savings on funded challenges. Oh my God. I'm sorry, J-Man. I just talked about that yesterday. Yeah. How that those things don't make sense. It's just, if you did the basic math, it doesn't make any business sense for those firms to exist. Therefore, it's a big stinky lie. Everything's wicking, Golden Surfer. All right, well, the news should be coming out soon. I'm refreshing my Bureau of Labor Statistics page. Yeah, boy. And thank you for being here today, guys. I appreciate you attending today. Thank you very much. And thank you to FX Street for hosting. All right, we must have a number. What do you stink? 263. 263. How am I doing? I'm now up. I just made 100 pips in the last 1 minute. See? Filthy stinking rich. Got rich quick. No, I was in this on Tuesday because it fundamentally makes sense. Now, get ready for a whipsaw, of course. But that's what the Wayne do. That's how the Wayne do. So we'll see. Get ready for a big, fat, stinking whipsaw. Go ahead and stick your neck out. See what happens. Thank you, moderator. All right, so let's take a look, yo. Making money, honey, baby. Oh, my baby. By the way, wait for the whipsaw. Hang on, let me draw this in case you don't know how to do a high volatility event-driven strategy. It's okay. We're gonna kind of like that. Juju. All right, whatever. Okay, let's go. Okay. What's going on? So 263,000 people got a job. And the unemployment rate fell down. Oh my God, the Fed's going to have to raise interest rates to 6 jillion. Now, here's the truth. You guys want the truth? The Fed has changed their monetary policy, what, a year ago? It takes 2 years for that type of policy change to impact the economy. So like a bunch of chickens talking to each other, because you know how chickens like to talk. We're like, blah, 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 blah. I know that's not a chicken. Let me try a chicken. Okay, they're talking to each other. And they're like, the Fed's jacking up interest rates. It's going to kill the job market. That is true. Late next year. Do you understand that point? It would make no logical sense for somebody to say the Fed has jacked up interest rates, so the jobs are going to, NFP is going to be like zero. Yeah, it will be next year. So when they say the risk of the Fed overshooting, it's that unemployment rate has actually gone down. You see that? So now I guess the Fed has to raise interest rates to 6%, and then 7%, and then 8%. Well, heck, if there's a 2-year lag, then you won't know the train has left the tracks and gone into the ditch until way after it's already happened. So that's going to be a problem. There's a massive lag. So I want you to know about that. All right, so what else is going? The number of unemployed persons edged down to 6 million. $1.2 million are permanent job losers, which means they have to be retrained. No one will ever hire them again. Okay. These people are temporarily laid off. Well, guess what? There's 10 million jobs and 750,000 were laid off. Shouldn't be a problem, right? Long-term unemployment, aka monthly subscribers to Xbox or PlayStation. Yeah. Labor force participation rate didn't change, but last month it did change. So that's interesting. Some people could be working full-time, but they're choosing to work part-time. But less people are doing that. 300,000 less people are driving for Uber when they should be, I don't know, doctors or lawyers or something. People not in the labor force, but want a job, which is really funny. They want a job, but they're not looking for it. Well, there you go. There's the productivity that they're really awesome at. Marginally attached to the labor force. What is that? Homeless people? All right. Telework because of blah, blah, blah. Who cares? All right. The establishment survey. Okay. So just as a sort of review. Okay. There isn't anything called non-farm payrolls. There's a household survey. And there's an establishment survey, which means they're surveying businesses. Now, when they survey businesses, they're looking at payroll stubs. So you could be counted twice here if you had two different types of jobs. Let's say, I don't know, you do dance instruction during the day and at night you do exotic dancing. 2 paycheck stubs maybe, right? I don't know. So anyways, you get double counted. Maybe. Leisure and hospitality added 83,000 jobs. Good. Professional business services 46,000. Manufacturing, 22,000. This is a really hot report, dude. Employment and construction trended up. You're kidding me. 6% mortgages, and there are people still building houses, huh? Holy smokes, eh? This is red hot. Wholesale trade up 11,000. Financial services, there you go. Now you can feel bad for Wall Street. So when a investment banker catches a ball, you can say, oh, well, that's good because he used to be an investment banker. You feel good for him to catch a $2 million baseball. You're like, oh, that's so good. He used to be a banker, but, times are tough for bankers. So I'm sure you feel bad for these Wall Street guys. Transportation and warehousing. Uh-oh. Now, that's a bad number. Do you guys subscribe to the Dow theory? That would be a big heads up. You're like, wait, transportation's getting crushed. Maybe that's a sign that we're going to have a big stock market crash next year. Well, that would be one. By the way, how are we doing over here? Oh, did I do that? You're welcome. And so on and so forth. It's quite detailed, of course. Seasonal adjustments. Yep. So you want to look at a subcomponent here and look at wage growth. Can anyone find the wage data? I don't want to sit here and read the whole thing. Okay. So, like I said, good news is bad news. That was a great NFP. How horrible. Okay, let's take a look and see how the rest of the market responded to a good non-farm payrolls. Take a look at XAU. This is GOD. Okay, initial response on a 15-minute chart was dropped like a ton of bricks. That's cool. Sorry, I want to get that out of the way. Okay. Move as expected. Yep. Well, okay. Yeah. So this was an expected top. Many of us at FX Bootcamp are short. It's actually fundamentally neutral at the moment. It's a bit early, but I can tell you technically, if we get a low today, then it sets up something like this in the future. Like let's say next week is a down week. And that would change things technically, right? Yeah, Thiago. Yeah, Thiago said, yeah, look, we were short this yesterday in the swing trading group. Yeah, that makes sense. But when you add it all up, it's still early, but that might be the right time to make many of these trades. So again, when we look at my super secret fundamentally based alert service, it says, hey, yo, there's a lot of things that are quite bearish, meaning gold will come down. But there's a lot of things that make this a challenge. One of them is it has been trending up for a while. That's why I said you need the down and the up to change the projection from slightly up to more down. Well, that can't happen yet until that other stuff I showed you changes things technically. So technically you could argue this is up. And in fact, right, it's scored it here. This is still has been over the last couple of weeks, right? Quite a bit up. It's gone from what, 1650 to 17 something, right? 1750. It's up $100. So technically it's too early to sell based on a day chart. Also, you want to look at things like gold has gone up quite a bit recently, but it's early in the season. It's not supposed to happen for a month or two. Or a month, I should say. It happened a bit early. So anyway, so if you're a bear and you're waiting, technically, you got that going for you and that might work for you. But by the time we run into November, there's typically some upward pressure. So it's fairly short-lived. So when you kind of add all that up, it's kind of like flat. Okay. 74% of traders, institutional investors are long, okay, are long dollar, but 60% are long gold. So once again, you're kind of stepping on other people's toes. You might be technically right, but there's some gobbledygook going on. And by technically, it could be both long or short. So if you were going to do this quantitatively, you would say, yeah, you could, but, you know, it's mediocre. Things might change. And if they do change, if they go a little more bearish, that's cool. But between now and the end of the year, I think it'll get more complicated. Okay. Lewis, join what? Do 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 do. So that anyway, so that's interesting. So that gives sort of a mixed bag picture for that asset class, but that's important, at least to know, right? Oh, FXBootcamp.com. We have a high threshold for qualification. You need a minimum of $88 per year. If you don't have $88, I can't help you. You're too far gone. The cure will kill the patient. Oh yeah, and we only let above average good looking people in. All right. Here's our oil trade from, what day was that? Was it Thursday? No, just the courses. Then if you want to join a live group, then you upgrade your account to add that. It's crazy though, $99 a month. It's crazy, I don't know. All right, I guess this was Thursday, right? This was our buying setup on Thursday. Okay, here's the one, I guess, on Tuesday. On Monday, I declared I was a bull. What do you get out of it? Nothing. Okay. And so here's our little roll reversal. So this is why it's marked. By the way, I marked this early Thursday morning. So what we ended up doing was on early Thursday morning, identifying this land. By the way, let me get rid of PSAR. There's too many things going on for the average person. They're freaking out. What the hell is all this, Wayne? You got too many lines. Okay, and I'll even get rid of this. Irrelevant. Okay, all right. I'll clean that up a little bit. And I'll get rid of that. All right. So on Thursday morning, what we did is we identified this. And then since we were here at that moment, I also identified the top of that range. Okay, cool. So I had declared on Monday I'm a bull. So on Thursday I'm still a bull. And the idea is you buy at support. Well, that would be the support. Okay, great. And there's about 3 different types of trades in here. One of them was when you hit that support, you go higher high, higher low, chow. That's actually highlighted. I don't know if you can see the little bit of yellow bits. That's highlighted there. Then, right? Then on a higher time frame, if you actually look at it, it does it again on like a 15-minute or 1-hour chart. The same as a 5-minute chart. It repeats itself, and you see it here. You see the first one here, but then it repeats itself here, which I teach, by the way. And then pachow. And then check it out. A whole day later, higher high, higher low. There's, just like I had done the day before, resistance becomes support. Okay. And what do you do now? Pachow. Now you look even closer. Okay. Can anybody confirm? Well, let's try to. So what? Okay. Anyways, there we go. It's just, I don't know. That's just how you trade oil. That's all. How do you know the higher low is confirmed? You don't. You've made a decision, and then you identify the risk, you place a stop, and you manage the risk. Nobody ever knows. It's always a tough decision. So in that case of the original move, if I can go back here, I got to turn all this other stuff off to go back. Okay, so in that moment, this is what we had on a 5-minute chart. Okay, so while it was falling, J-Man, while it was falling, okay, so we were in this process here. Can you see that? Let me do a different color. In this process here, I reaffirmed with everybody, this is the support. And then I double reaffirmed by highlighting the support in the support, which is this gray box is a box inside of a box. Just saying, okay, I think that's our low based on this move. So we're literally now making decisions on a 5-minute chart, but not to be a bull or a bear. You knew that a day ago, 2 days ago, 3 days ago. You're like, well, Wayne, how do you know that? Fundamentals. In fact, I talked about it probably a week and a half before I actually declared I was a bull. I declared I was getting ready to be a bull. And then on Monday, I declared I was a bull. So by the time you get here, there's no discussion whether I'm a bull or a bear. So anyway, so we get down, we hit our support. Okay, we get a bullish engulfing candle off of support. So I draw this line. La, 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 la. That's probably our line in the sand. Then we draw a Fibonacci from that top once we start to get a red candle. And I analyze it and I say, okay, everybody, if you is a bull, this is your buy zone. And if you're a bear, get ready, you're going to get challenged. See, I don't know if you're a bear. I don't know if you're a bull. I don't know what you decided. Doesn't matter to me. Because I don't know the future and you don't know the future. So all I can tell you is I'm a bull. So we kick off support, make a big move. I want to buy a dip. It's not complicated. It's just price action. So I used Fibonacci in that case. So it came down, hit the fib zone, and went up. Cool, higher high. What do you do after you're higher high and you're a bull? Buy a higher low. Well, in my training course on how to trade oil, I actually predict this move and this move. This is the whole idea that it repeats itself. First on the 5, then on the 15. What if? It's all the same thing. Okay. And then what? Okay. And then it continued up the rest of the day. Now, why did oil go up this week? Give me one good reason. And I'll turn back, right back around. Give me one, just give me, how does it go? Just give me just one reason. And I'll turn back right around. Supply cuts. OPEC what? Don't say OPEC. It's like say, why is the value of the currency changed? The central bank. I slapped Raymond for that. What changed the value of oil? OPEC. You don't even have to know. You just throw that answer out and you're probably right. I mean, come on. Okay, Victor got it. But I'm going to pick on Victor because he's a big, tough guy. By the way, where you been, man? All right, here's the problem. I dug into it a little bit because that's what the news has been reporting. Guess what? They didn't cut production. What did they cut? This is why you got to do your own homework. Oh, my God. Oh, my God. It's been misreported by probably everybody. Thank you, Rico. They cut the quota. So there's more to it than that. But you know what? You listen to a journalism major that makes $28,000 a year working at Bloomberg. She doesn't know anything about oil or futures or trading. She went to an obscure liberal arts school, became a journalism major, lives in a tiny apartment in New York City with 2 other roommates, and you're taking trading advice from her. And that's the danger. You gotta, oh my gosh. So it was not production. They did not decrease production. They decreased their quota. And you're like, well, Wayne, what's the difference? It's all the difference in the world. So what is going on? Okay, so you got OPEC. You got a bunch of OPEC members. Let's just make up a number. Okay, 100,000 barrels, 100,000 barrels, 100,000 barrels. Okay. Let's say that's the quota of 3 people in this cartel. Okay, now let's talk capacity. This country, if they turned everything on full blast, they are capable of producing 50. If these guys turn their spigots on full blast, they could do 80. Okay? And if these guys turn everything on full blast, these guys could produce 170. Okay? So, if this quota was cut to 80, what does it change? Okay, this one's cut by 80. What does that change? Okay, and this one is raised to 140. What has changed? The only thing that changed is this one can produce 40,000 more barrels. You see? And oil production went up. They cut, but production went up. Now, why would they do this? Okay, well, what if this is Saudi Arabia? Okay. No, by the way, no, something did change because the quota was 100, but they could only do 50, so there was only 50. The quota was 100 and they can only do 80, so there's still only 80. But now we have 40,000 more barrels than we used to, only because we changed this number that was irrelevant anyways. So we actually have 40,000 more barrels because of a quota cut. Okay? And that 23-year-old journalism major working at Bloomberg who takes the subway to work is giving you financial advice that they cut by 2 million barrels of production. No, they didn't. So that's going to be a problem. So why did they do this? Well, this could be Saudi Arabia. Who else could it be? Who else could possibly increase production if Libya can't do it? If Iraq can't increase their production any higher? Who else could it be? I think Qatar is mostly gas, isn't it? The U.S., the United States is not a member of OPEC. Russia. Oh, snap. Oh, snap. Is it Russia? Oh, man. Could be a rabbit. Could be. No, Canada's not a member of OPEC, guys. Come on. Stink it through. Anyways. Yeah, I'm wondering if it's... Okay. No. I already answered it. Okay, Brazil's not a member of OPEC. All right, anywho, Russia's the plus. Thank you. Oh, my God. So, anyways, that is interesting. It is interesting. So, we got to dig deeper into the facts and be careful. I still think oil's going to go up, but I think there's a pretty big chance that people that don't do their work are going to be surprised later in the future of supply remaining at current levels. And they're going to say, well, Saudi Arabia, because sometimes they say Saudi Arabia when they mean OPEC, but you'll hear people on TV said, Saudi Arabia is going to put 2 million barrels less oil in the market. All I'm trying to say is that's not true. That's what we've been told. But it's actually not true. Morena says, I look like I got tats? Really? I'm not that cool, am I? I'm not even looking at the camera here. Really? Really? Where? Oh, that? No, that? I don't know. I don't have tats. Yeah, I got scars from my gang years, bullet holes and shanks and stuff. But a tattoo, no. Anyways. You guys having fun today? Let me show you the daily chart. That's what I've been dealing with. And that's what I think the most interesting thing going on right now is, now what? Yeah. That's right. You make a stupid trade, I might shank you. Yeah, I was in a cranky mood yesterday, I guess, because I told people if you made a bad trade, I'd push you out my window. And then I'd walk downstairs, drag your dead body all the way up to the roof, throw you off the roof. Your dead body, I'd throw it off the roof. And then I'd buy an anvil, a big, heavy steel anvil. And I'd throw it off the roof and have it land on your twice dead body. Wild E. Coyote style. All right, so Biddy's down. That's a big risk off. Totally makes sense. Gold's coming down. Totally makes sense. Get ready for the snapback, though. You're like, what snapback? Once again, about 10 years ago, I'm guessing, I wrote an article that would then predict a snapback. So that would be the snapback that I'm thinking of, huh? Yeah, triple dead, man. Beef stew. Let's take a look at the world's response using indices. CAD benefiting. Oh, I didn't even look at kitty CAD jobs. Yeah. Okay, yen is up. All right. Maybe some of that YCC. Dollar's up, which is good because I'm a buyer. Swissy trying to regroup. Pound sort of not sure what's going on. Kiwi weak, Aussie weak, so that's good. So let's take a look at some dollar pairs. How's this one doing? It's great. Okay. We've been crushing this one for a while. One of the lessons I've been doing in, I think it was more of the day trading group, of this idea that you forget if you're caught in, I guess the analogy would be walking through the forest. Okay. You forget what's that, where you're going. I know, not a great analogy, but anywho. Okay, you get caught in there. Look, it did nothing for 2 weeks. What was that rate, eh? Okay, but you need to do both technical and fundamental analysis to reassure you of your bias. Did anything change in that period? No, nothing changed in that period. That's what you got to stay focused with, or focused on. Nothing during that consolidation period has actually changed. So you can get fooled, okay? These green candles don't mean up. These green candles don't mean up. Okay, these green candles don't mean up. And will probably continue down. Now, you say, well, what do you mean by probably? Probably. I mean, statistical analysis will show the probabilities are greater to the downside. It's just statistical analysis. So, on this chart, continuation, in my humble opinion, was much more likely, and that we were paying attention to the slope and direction, if you will, of the 21. Okay. Cool. Do you want to know next week's trade plan? Yeah, it's probably something like that. Do I trade euro pound? Why do I want euro pound? I'm always going to ask why. Why euro pound? Give me your thesis. No? NP? So I would argue, quantitatively speaking, this is something that you should be watching, but maybe not trading. Interesting. I have to reload this. For some reason, the browser, I think it's the streaming software. Seems like a difficult pair. Well, you want the easy pair. There we go. Now I can resize it. So I have to do all the calculations over again. So looking at this pair, let it load, because we're actually on the cloud. Notice I'm not even on a website. This is artificial intelligence sitting on the Google Cloud, calculating 9 different categories of fundamental and technical analysis, scoring them and analyzing them, and creating a bias for 38 asset classes in real time. So, quantitatively speaking, you should probably pass on this one. You should keep an eye on it. Retail sentiment is 50-50. Nobody cares. 50% of institutional investors are long euro and 46 are short. Like, nobody cares. And then the market's heavily short pound. And fundamentally, it's kind of split. And the trend is slightly bullish. It's only a 1, but bullish going flat. So there's no technical and fundamental reason to even give a damn currently. But if you look seasonality, which is trying to predict the future, this very often goes up between now and the end of the year. Over the last 5 years, it's been in the month of October, and over the last 20 years, it's been in the month of November. So you might be a few weeks early, and it would favor euro slightly, but we don't see it in fundamental analysis of institutional positioning. And you're like, Wayne, I really like that. I really like that. Well, how about this? Oops, not that one. This one. Do you like this? This is institutional positioning and retail positioning. 97% of retail traders are buyers of Kiwi CAD. 98% of retail traders are short USD Turkish lira. And, so you kind of probably want to ignore the stuff in the middle and say, well, if they're heavily short USD yen, I might consider buying it. If they're heavily short CAD yen, I should probably consider buying it, because retail, maybe don't have it right. And if they're heavily long, maybe I should look for shorts. So look at this. 89% of retail traders are long Aussie Swiss franc. Cool. Let's go look. Let's take a look. Where's my Swissy? Okay. Where did it go? I closed it again. Why do I keep doing that? Wayne McDonell. Okay. 89% are long Aussie Swiss franc. Huh. So could we do something like this next week? How would you feel about that? Why would you do it? See, institutional traders have very, very, very large stops. Retail traders have very, very close stops. So as soon as they are wrong, because remember, 89% are going for here, but their stops are super ridiculously close. So if you can stop them out, pa-chow, 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 pa-chow. In fact, the way I teach you if you join FX Bootcamp, this whole thing is obviously, clearly, beyond a shadow of a doubt, the place where institutional traders will sell the hell out of this pair. And if you don't know that, you're going to be, what do they call it? Roadkill. You will be roadkill. You don't know how to trade. And so you can see somebody obviously took the trade. And so now it's like, well, what do you think about next week? How about that? Could that happen? Yeah, it might. It's not that it's going to happen. Okay? But wouldn't you like to know where all the dumb money is? You're like, no, Wayne, I don't want to know. Well, that's what they're doing. And maybe there's an opportunity to hunt their stops. Okay? Okay? So we can say, well, okay, what about the fundamentals? It's very confusing. Oh, yeah, well, Aussies, and I'm not a bull on Aussie. I'm a bear on Aussie. So do I want to do that? Well, I do want to sell Aussie because I'm a bear. When you compare Australia versus Switzerland, you get a neutral picture. But you have to understand what I just said. I'm a bear on Aussie anyways. Well, what about Aussie Swiss franc? I don't care. I wake up in the morning and I sell the Aussie dollar. What do you stink? Smell like a plant? Yeah. I know before I even finish my breakfast. I run to my charts and I want to sell an Aussie dollar. Is it helpful? Heck yeah. Now, fundamentally, you look at it, it doesn't make sense to do this pair. But as I showed you, 89% of the market on retail market is long. So I'm like, okay, we're on a precipice. Do you understand? We're practically standing tippy-toes on stop losses. So maybe there's an opportunity there. Also, it's neutral, but more bearish, and I want to sell anyways. So that's good for me. But also, when we look at the technicals here, okay, that's backward looking. Now we are projecting the next 7 days. So this is the worst case, base case, best case scenario using statistical analysis, not guessing. Not guessing. There's no guess here. This is only statistics. And based on what has been happening technically, this will fall to 62.5, maybe only 63. Hey, we were at 64.5 recently. Would have been interesting, right? So you're like, okay, it's not fundamentally bearish, but it is technically bearish. But here's this. Check this out. So we are doing, so this stuff here in the pretty little colors, that's predicting the future. What else is predicting the future? Right here. See, this is what we're doing now. This pair has been down, and that's what this says. And if it continues down, that's what this says. Here's the next 7 days. Okay, this shows we have been down, which is actually kind of unusual for this pair. But if the 5-year and 20-year price action says this has been going down in years past, in the month of October and let's say November, December. Oh. So maybe in 2 weeks this says sell, but I'm already making money and you're already making money. Why? Because you're going to hunt these guys. You're going to hunt their stops. They don't see this move coming. And if you're right, they will stop out and it'll cause a cascading chain of sell orders entering the market because all retail is long. The reason it's not going anywhere right now is institutional investors are shorting Aussie and institutional investors are shorting Swiss franc. So this is neutral. It doesn't make sense from an institutional point of view, but we have a lot of dum-dums that are long. And if you think that it's an opportunity to hunt their stops, then now you have a strategy based on quantitative analysis of positioning and of seasonality and of technicals. But fundamentally, this is neutral. Come on. That's nice, huh? Okay. Oops. So again, check this out. I'm going to put it here. I'm going to put it here. Download a copy of what a report looks like. It'll cover the S&P 500, gold, oil, some dollar pairs, some yen pairs, all in a beautiful report. It'll show retail positioning, institutional positioning, and a whole bunch more. I mean, it's very, very detailed. Download a sample, check it out. And go. And here's what you're going to go. You're going to download it. You're going to look at the report that gets done every week, and you're going to go, holy shit. And then you're going to say, I don't know what any of this means, but it's beautiful. Luckily, it says short, right? So sell. And the other one says buy. And the other one says neutral. But, oh my God, you're going to find that it's an eye-opener. Check it out, man. Check it out. Check it out. I'm telling you. Game changer. So again, people are asking good questions, and I'm pulling this up, and I'm like, it's a good question, but your timing's off. It's a great concern, but your timing's off. Well, how'd you like to be able to do that in seconds and just get to the meat, get to the juice? I got to move. Give me the juice. Okay, so out of 38 pairs, you only want to look at 5, right? You're like, just skip all this other stuff. Let's get to what's happening now. And that's what that's all about. I mean, maybe I guess I can show you. Let me just show you one more. I know. I'm in danger of overdoing it. I know. But like, imagine this. Okay. You logged in. How are we performing versus what we expected? Check this out. This red stuff means quantitatively we expected it to fall today. And if you're in this quadrant, It fell today. And if it's blue, we expected it to go up. And if it's blue and in this quadrant, it did go up today. These were a little surprising. That might be tomorrow's sell. Do you understand? It's supposed, the statistical analysis says this stuff here was supposed to be falling. It's overpriced. Oh my God, it's overpriced. That might fall tomorrow. But you know that in less than 1 second, you're like, oh snap, I'm going to take that stuff down. And this stuff was supposed to go up and it only moderately went up. It actually came down a little bit because it's in this quadrant here, right? So these things were supposed to go up, but no, they didn't really. They didn't crash either. Okay? But I'm like, this one here, these ones here might be tomorrow's sell. They went up today, but they were supposed to fall. But isn't that nice to just know that in a millisecond? Or that today, these are the things you were supposed to be buying, and these are the things you were supposed to be selling, and this is what's happening in the markets. Here are the strong trends, both bullish and bearish, and you can sort this. These are all the positive, strongest bullish trends. These are the strongest bearish trends. Here's the commitment of trader report, biggest change. Okay, whole bunch of money went into oil. Okay, you see that? A whole bunch of money went into oil. Whole bunch of institutional money went into oil. Oh, snap. A whole bunch of money went into... Cool. Got to know that. But you either don't know it or you spend hours trying to figure it out and sort it all out. Okay? Holy smokes. Holy smokes. Holy smokes, huh? Okay. Yeah. So let's get off the Swissy. Let's go back to do another dollar pair. Here's Kiwi. So I'm short Kiwi. My trade plan was up, 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 down, down, right? It went higher than I thought, but I'm still in my trade. I've moved my stop to break even. I'm short at 57.50. We're at 56.30 something, so I'm up just over 100 pips. Cool. NFP brought it down. Oh my God, what? Sell the hourly 21? Okay. So that's probably my trade plan for Monday. I don't care what's happening today. I hope you appreciate that and understand that. You're like, well, Wayne, what do I do now? Well, if you don't know that, you should stop trading. I'm not even worried about now. I'm on next week. So I'm much more interested in like, why would I do that? I'm front running Monday. Lucas says, I stated it earlier. That tool has already paid for itself for the first month. Great tool. Hey, awesome, man. That's really cool, man. I appreciate that. Darko says, yeah, great tool. A lot of experience inside. Yeah, well. Thing is, I haven't even officially launched it. It'll have to wait till next month. Life has gotten in the way. Life's complicated. But I will officially launch it, and likely prices are going to go up. Huh? That's all I can tell you. Okay, yada, 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 yada. What do we want to do now? What are the prices now? I don't know. You'll have to do some research. Maybe click the link I posted twice. Ether? No, Bitcoin, I'm going to stick to Bitcoin. But the way I use Bitcoin is risk on, risk off analysis. And I have it trapped in a range here, and it's been here a very long time. So it tells me actually the market is not market for Bitcoin, the market for everything. It helps me look at aggregate demand, and it tells me aggregate demand is tilted to bearishness, but actually neutral. JK Ministry says, can it happen that the US dollar will no longer be the reserve currency? Can that happen? Yes, it's going to happen. Yeah. Okay. The issue is there isn't a replacement currently. But it will happen. Absolutely. Will it happen this year? No. So you can hate the US dollar, but you'd be a fool if you were selling it. There's a shortage of dollars, like there's a shortage of oil and nat gas. There's a shortage of dollars. Nobody loves it, but everybody wants it. Okay? Okay. So anyway, so I look at Bitcoin as bearish to neutral, but that represents everything to me. The stock market, the bond market. Okay. A lot going on. And that eventually will impact prices, right? Like, what about like the dollar? So if I do something like, let's see if I have this on here. Let's do, I think I have this. Here we go. The yield on the 10-year T-note. Here's the future yield. This is the future interest rate in the United States for next week. Oh, which means I got to post this on FXstreet. QuantBox is now supposed to start posting its projections on FXstreet, along with Goldman Sachs and JP Morgan. Yeah, I forgot. So anyways, this is predicting the future. This is how you do it. Statistical analysis. It's quantitative analysis. Okay. So 7 days from now, the yield on the 10-year T-note could approach 4% again. Somewhere between 3.73 and 4.0. This is worst case. So base case is 3.86. Best case is 4.0. On October 12th. What does that mean? Translate that into a currency pair trade. What could you do to make money if you can't trade the yield on the 10-year T-note? Convert this into Forex, guys. Come on. Buy some Shiba Inu. Hey, you can buy mine. I'll give you a good deal. Buy $1. As Kanye would say, oh God. Yeah. Oh my God. Oh, you got to know this. You got to know this. Yeah. Are you feeling naked and inadequate? Mm-hmm. Hey, I had to go to Harvard for 5 years. Instead of buying myself a Ferrari, I decided to go to Harvard for 5 years. QuantBox is cheaper than two Harvard degrees, by the way. QuantBox costs less than buying a Ferrari and less than being a full-time student for 5 years at an Ivy League school. What's it cost? What a dumb question. Whatever it costs, it's worth it. Yeah, Darko, and I kind of talked about that last night in the swing trading group, where the biggest threat to like current existing trends would be a sudden peace in the Ukraine. And I think it would lead to people making sort of degenerate gambling decisions. Like they'd be too quick to react. Like, oh my God, that's good news, boom. And they sell the dollar. And that would impact us on the short run for sure. And we would have to adjust. But what I was saying last night in the swing trading group, Darko, was that doesn't change anything fundamentally. And that could lead to a much worse disaster down the road. You know what I'm talking about? So I'm not going to talk about what if type scenarios. I'm talking about what's happening here, what's happening now, why it's happening, how professionals are positioning their money, where retail traders are positioning their money, and what typically happens over 5 and 20-year cycles using things like economic data, interest rate differentials, trends and seasonality, okay, technical analysis, and price projections into the future. Like, yeah, but what if this other thing happens? Well, be careful. I'll have to adjust. I'll probably have to go to cash and regroup later. Okay. JK Ministries, you're asking questions that might be relevant, let's say 10 years from now. So they're not bad questions, but they're the wrong questions. It's like someone through the entire .com bubble talk about how bearish everything is, how overpriced everything is, how stupid everything is, how hysterical everything is. Meanwhile, they're missing an unbelievable rally. And of course, 8 years later, they say, see, I told you it was going to crash. Right? You're right. It's going to crash. But don't worry about the end of the US dollar being a reserve currency and all that kind of stuff. Now, I have talked with my live groups about one scenario that could kind of happen. It could happen over the next, let's say, 6 months. Something could happen that could change that point of view. But I got to wait for that to even start to maybe develop before I can pull forward the, let's say, don't worry about it for 10 years kind of attitude to suddenly, okay, something has changed, the variables have changed, and so therefore we have to pay more attention to this. Maybe I have to pull it forward. Maybe it's this year, not 10 years from now. But we're 6 months away from me even being able to do that. So I'll go back to like, yes, 100% it's definitely going to happen in 10 to 25 to 50 years from now. Casey says definitely less than 10 years. Based on what? Remember, I want facts. So based on what? And I don't need you to list them or whatever. Like, look, I'm not even going to listen. Because I've already done my work and already have my opinion. So you're like, you believe it's definitely less than 10. Okay, well, we'll see. I'll agree with you when these other things kick in, and then I'll talk about it then, and I'll teach it. But when I study the macroeconomics, as Matrix says, you know, I know people talk about this stuff. I know. It just is gobbledygoo nonsense. There's nothing worse or more dangerous than somebody 1% smarter than you. Because you don't know if they're wrong. They just sound right. So there are a lot of people in this world, and now you don't need a radio station or a television station that requires credentials. If you want to be an expert now, there are kids on YouTube teaching you how to trade Forex, and they're bragging that they have over 5 years of experience. Right? What's the joke? I got chunks of corn in my crop bigger than that. Right? You're like, dude, 5 years does not make you an expert. Okay? Okay, so anyways, you got to be very careful. So when people come in and they procrastinate, like, it's the end of fiat currencies. It's the end of the US dollar. Blah, 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 blah. It's all about to collapse. Okay, that will happen, but not now. So just really, really be careful. Okay, be very, 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 very careful. I can guarantee you every billionaire on the planet is buying dollars. Now, they might hate it, by the way. I'm telling you, they might hate buying the dollar, but nobody's selling the dollar right now. There's no way. There's an incredible shortage of dollars. An absolute shortage of dollars. So be careful. Now, of course, everything will change, and then it would be more appropriate to have those conversations, is all I'm saying. So don't worry about the skies falling. Okay? Don't worry about the sky might fall. You might be struck by lightning. You might be hit by an asteroid. Don't worry about those. You got other things that you need to be focused on, and that'll lead you to much better success, in the here and the now. Okay? I'm just trying to get you focused on, like, hey man, we need to make money on Monday. We need to make money on Monday, guys. Okay, there's the big snapback. Oh, did we talk about that? You're welcome. My oil chart. Oh, sure. Okay, this one. What time frame do you want? By the way, it was just 2 days ago I asked people, do you think it's going to hit 80 first or 90? Boom, 90. Okay. Matrix says, but your Veritas might come in the form of a loss. Well, when I said I could have bought a Ferrari, but I went to Harvard. Yeah, I lost money. I went to Harvard. Okay, I was short cash, long education. And now I have 3 pieces of paper on my wall. There's one of them. Oh, let's see if I can put it there. Yeah, see all that? You know what that says? I'm smart. I'm beautiful. But the best thing about me is my modesty. How much money? A lot. Well, like I said, instead of buying a Ferrari, okay, so think about it. I don't know. Honestly, I don't even know. It's just money. Who cares? I wanted to be a role model to my children. Okay. All right, so this is good. I'm loving oil. Oil's been very kind to me. Thank you, WTI. I don't know if I saw a question there, Hope. Oh, you wanted the 1 hour? Sorry. All right. So I'm not what you look... So how many people here recall in this webinar how I showed you how to use price action? Where I said on oil, I explained what we had done in here and here and here, right? And that there's a higher high. Okay. And then we're probably going to retest this and use that as a higher low. We call that a role reversal. Do you guys remember me doing that today? Well, I know in the oil course. No, but I mean in this live stream. Okay. Did anybody download the QuantBox report, the sample? Yeah. Any questions about it? It's a lot of information, isn't it? At first, it's you look at it, you're like, it's beautiful, right? You're like, it's beautiful. And then you're like, but what does it mean? Yeah. You're like, it's beautiful. What is it? Awesome sauce. So don't worry. I am in the midst of putting together a big, huge, detailed training. So you know what each little piece of information means. Not what it also means, but like what I was showing you today. You got, in some cases, you got to read between the lines, right? Like, it's not what's happening now that matters. It's what's going to happen next that matters. So you need to predict that, you need some backward data. You need what has just occurred, but then you need some future guidance, which is like price projections and seasonality and all that kind of stuff put together. And then you got to find things that are currently neutral, but will become bullish or bearish. And knowing the future guidance of price or the future guidance of seasonality could then lean you toward watch this, get ready for this. Not just here's the things you should be selling and buying, because very often you're too late because everyone's already done it and you're just showing up. But the other stuff is what's going to go from neutral to bullish or neutral to bearish. And that the forward guidance will help you really be ahead of the curve, not by hours or days, but probably weeks. Lucas says, could we have a small lesson on the scatter plot this Sunday? Absolutely. Yes, I will definitely do that for you if you definitely ask me to. You better ask somebody. Okay? Yeah. Now, Mayor says I'm usually early, because of the psychology aspect and stuff. Well, this would be more like, it says get ready, but not now. You see what I mean? And if you read the chart or the analysis properly, you'll see why. Like maybe the technicals are there, but not the fundamentals. Or maybe the fundamentals are there, but not the technicals. And that would be the most important part. Let's say it says fundamentally this currency pair or this asset like gold or oil should be bearish. Remember, it's just quantitative analysis. It's right. It's not subjective. If you want subjectivity, listen to some idiot on YouTube. If you want the numbers crunched and the output given quantitatively, it's factual. There's a differential in the GDP between the two economies. It's a fact. It doesn't make mistakes. This is GDP here. This is GDP there. This is inflation here. This is inflation there. This is employment here. This is employment there. This is interest rates here. This isn't it doesn't make mistakes. But despite all of that, let's say everything quantitatively says down, but price is up. That's what you want to see. That's what you're looking for. Maybe institutional investors took profit and they're out right now. So retail's driving it up. Well, in the near future, tomorrow, next week, at the beginning of next month, institutional investors come back and short it again. You will be ready, willing, and able. That's what I'm talking about. Huh? Hope said got short on 38 SPX. I'm triple leveraged short the S&P 500. And I have been since the summer. Stock market's getting crushed right now. That means I'm making money. I love it. How awesome. By the way, I told you in January that it was going to happen. Can anybody confirm that in January I said every October I would be longing the stock market, but this October I'm selling? Jim said I can. Anybody else? The mayor says you sure did. Anybody else? Lucas, yes. Maida? I can't. Really, Maida? Shroud? Yeah. 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 Oh my God. In January, February, March, April, May, June, July, August, September, October. 10 months in advance. I know it sucks, right, Matrix? The thing is, right, I'm trying to tell you is it's predictable. Where did I say that? I did a 2022 Outlook video. I did a live, right, for FX. All members of FX Bootcamp are there. We have video only members. We have swing trading group. We have the day trading group. There's three. It was an all hands meeting. Every person was able to access it live. And I kept the recording up for a month in early January. Okay, so either I do have a crystal ball, and I promise you I don't, or there's logical information that you can gather and formulate into a strategy. And that's what I'm trying to pitch. You can do this. It's the fact that you can't, I am totally convinced, is the one thing holding you back from the success you believe you deserve as a trader. I'm going to guess almost everybody here is quite good at technical analysis. And yet, I also believe that most people here have not hit the success that you wanted or expected. You're like, I'm just missing something. Like, I've been doing this for years and I'm making money, but then I'm not making money, but then I'm making money and it's working great, and then I'm not making money. And they're like, there's just something. And you know what it is? I know exactly what it is. Okay? That's what I'm trying to tell you. I know exactly what you're missing. And I developed something that will fix that. It's done. I solved your problem. It's done. Okay, I've been showing you fundamental analysis, macroeconomic data. You're very often doing excellent technical analysis on the wrong currency pair at the wrong time. You're doing everything correctly on the wrong asset at the wrong time, and it doesn't give you the result you expected, but it's beautiful technical analysis. Now, if you converted your awesome, beautiful technical analysis and traded the right asset at the right time for the right reason, you will do much better. I can absolutely, totally fix you. It's not even your fault. You're not really doing anything wrong. You're probably doing everything right, just on the wrong thing or for the wrong reasons. It's not your fault. Very few people can understand this. I listen to people on TV and they don't get it. There's just a missing piece. That's it. I'm telling you, you're so close. It took me 20 years of hard work. Where did it go? Did I kill it? No, it's over here. 20 years of hard work. Hundreds of thousands of dollars of effort over decades. I know it's missing. I know it. I can help you make better decisions. You're doing everything right. There's just one last piece that's missing. All you have to do is learn macroeconomics, global money flow, monetary policy, and have the inside information of institutional and retail positioning and the ability to see backwards 20 years to try to predict the future, and then have advanced knowledge of predictive technical analysis so that you can then buy WTI at a support level. Now, if you're focused on the right thing for the right reasons and you understand why in the world is money moving, then dude, your technicals are going to kick ass. You're good enough to succeed to levels that are beyond your dreams. You're just focused on the wrong thing at the wrong time. And it's leading to mediocrity. And you know I'm right. You know I'm right. You know I'm totally right. I fixed it, man. I fixed it. Again, I invite you to check it out. You don't believe me? You think it's a sales pitch? You think I'm trying to get rich? Whatever, dude. Say no all you want. I don't give a damn. You should check it out. Oh, but this, but that. Don't do it then. I don't care. I really don't. If you want to step up, there it is. You can fight me all you want on it. I'm not even fighting. But most of you know I'm right. Okay? Once again, like this idea, big, huge institutional investors that make billions of dollars trading Forex, they don't trade anything like you. And you also know that's true. I don't know anyone on quote unquote Wall Street that trades like you, that trades like, what you're taught in this world is to trade like retail. Nobody trades that way. No professional trades that way. They don't. If you do the math, you can't scale what you do. It's a flawed business model. It makes no sense. Well, Wayne, if I just scalp, I'll keep my stops really tiny and I'll pull out little tiny winners and I never risk too much and all I need to do is be right 80 or 90% of the time. It's stupid. It doesn't make any sense. I'm not trying to be mean to you. I'm not belittling you. But if you analyze what you're doing from a business perspective, it makes no sense. You want a business that doesn't scale. It doesn't make sense. You want lots of little winners? It doesn't make any sense. There's no professional trader that trades the way you've been trading. You have to truly embrace it. Again, I'm not slapping you. That's what you were taught, probably. What are the universal truths? Buy low, sell high. Your losers must be small, but your winners have to be big. Well, how do you have big winners? You have to let your winners run. How do you know to let them run? Because you know why you took the trade. Somebody asked me to do gold. I asked 5 times why. And that person never gave me an answer. That's why I asked the question. It was a loaded question. I know they don't know why. They have no idea why it goes up. They have no idea why it goes down. But they got some lines on their chart that says, oh, well, gobbly-goo, this, sell up here, gobbly-goo, buy down there. But they have no idea why. They're waiting for the three pregnant nun candlestick pattern to tell them what to do. MACD is going to make you rich. RSI is going to make you rich. Oh, if you only knew Elliott Wave, then you would be rich. It's insane to think that way. But I know you get really good. Okay? I know you're really good at technical analysis, and I believe you need to be. I want you to understand I love technical analysis. Okay? What's the end? How am I doing on these? I still have 570 pips profit from my 3 trades. Aswin, is that good? Is that okay now, Aswin? Now do I have your respect? Okay. I'm telling you, you must be an amazing technical analyst. I think there are weaknesses in the institutional community. They scoff and laugh at technical analysis much of the time, not always. But I think you must become an expert in technical analysis. But I also believe you must know why you're taking a trade. You must know the fundamentals. You must know where everyone else is positioned. Okay? You're trading blind with technical analysis. Again, look at the retail traders. 90% are long, while 70% of institutional traders are short. They don't even know what's going to happen next. Okay? So you must be an expert in technicals. You must be an expert in fundamentals because you have to have the capability where fundamentally, quantitative analysis will tell you this asset should fall. And then you as a technical analyst open your chart and you're like, fall? I can't sell here. We're at support. Oh, well then wait. No, I got knocked out. Aswin, I got knocked out of a lot of trades recently. Right at the end of the quarter, I was wiped out of a lot. I was short Aussie, short pound, I was short Japanese yen. And then we had the intervention, and that took me out of the yen pairs. And then we had the Bank of England intervention, that took me out of the pound pairs. I did quite right. I did do quite well. But now it's like, oh my God, right? So Seonx says, FXStreet, did you take any trades? I don't think the moderator trades, but if you're asking me, to date, no, I made them 2 days ago. Okay. But we can go back and look at Euro again if you want. That's what we had set up. Okay. Okay, so let's go back out here a little bit, just a little bit. All right. So we had the move. Okay, we had the move. It was a good NFP, which means bad news, which I told you before. It dropped like a ton of bricks. Okay. I said get ready for the snapback. Okay. Which also happened. If we drop into a smaller time frame than that, we can see. I have to go even smaller than that. 5 minute maybe. Yeah. On the 5-minute chart, again, so let's go back. Before the news, I said a good NFP would be bad. Good NFP was bad. There's our top. It dropped here in the first 5 minutes. Then I drew this box with a Fibonacci extension pointing down, which is a sell. If you don't know that, then I am not going to tell you what to do. If you don't know that, you don't know price action. You don't know Fibonacci. You don't know how to scalp. You got to join FX Bootcamp and learn. You just don't know. If you need me to translate that to you, then you shouldn't be trading non-farm payrolls. That is a bitch slap, by the way. If you don't know what that meant, you should stop trading. Full stop. Stop trading. Okay? So anyway, so that came down, and then it dropped like a ton of bricks. So I'm like, get ready for the snapback. Get ready for the snapback. It always snaps back. I put it in the report. I asked you to read the FXStreet report I wrote 10 years ago. It says this, counter trend trade. Cool. And now we're figuring it out. It could go back up this way, by the way. It could, totally. But I would say my analysis and coaching today was pretty reasonable. Have you clicked the thumbs up button out of respect for FXStreet? Okay. Cool. So that's it. I don't want to come across like I'm saying I'm perfect and I'm the best and there's no better trader than Wayne. I'm trying to express my desire for you to make informed trading decisions, both technically and fundamentally. I hope you get that message. Okay? I hope you get that message. Cool. How else can I help? See you, Mayor. Well, my interest in WTI has to do with backwardation. So I declared in July when oil prices were going to fall, that I expected, as they were falling, I said that had to do with the recession being priced in. And that the next level, we have to look for decoupling between oil and the stock market. And I believe that to have started to occur. So it's not like an implied volatility that I'm kind of analyzing here. It's like, when will backwardation kick in and decouple from demand destruction into supply constraints? And so I just led an oil trading group. We worked from July to really Thursday. Okay. And when we were here, I said, we might be at that point. I'm very interested, but it's too early. Then we breached the mean and did our role reversal. Now I'm like, now I'm very interested, but I have become sort of cautiously, neutrally bullish that things might be changing. But of course, look, we're still in this trend, right? But I'm definitely on red alert. And then when we finally sort of got up into here on Monday, I made my declaration that I believe we have our decoupling of the two markets, and that supply constraints seen in July's backwardation is going to rear its ugly head. And then I'm not going to say any more, but I'll tell you, I took that and extrapolated that out to interest rates, the stock market, and what's likely to happen over the next 6 months, how to trade it and how to make money. But for that, you don't get that in a free live stream. You're going to have to join FX Bootcamp. Aswin says, hey, am I going to hold dollar, euro, dollar because of a good non-farm payrolls? Well, what I said before non-farm payrolls came out, I said, I don't give a damn about non-farm payrolls. I think it's irrelevant unless it changes something. The number is so crazy. 263 is not crazy. So it hasn't had any impact on my trading whatsoever. What's my view on the bottom of the S&P 500? I hope it doesn't go to zero. I don't believe it's a number issue. I believe it's a time issue. Okay. Wayne, you just given me the missing link. Thanks. You're welcome. Did you sign up for QuantBox? Okay. Why is the mark? I'm not even going to answer that, J-Man. Come on, dude. Oh, my God. Well, okay. Let me answer that. Okay. Let me answer that. Let's do that. Why not? It's Friday, man. I'm tired. But yeah, let's do it. Let's do it. Let's get this. Do it. Let's do it. Let's get it done. All right. May I have permission to do basic math, please? I don't want people to drop out of the live stream and hurt FXStreet stats or something because I'm going to do math. Let's do this somewhere else. I'm not going to mess with this chart. I have too much love on it. Let's do this WTI. Okay, let's do this. Okay. I will do this in two parts doing math. Okay, great. Thank you. Part one. Oops. Let's do this in black. Okay, part one. There's two parts to a stock market decline. Okay, something changes in monetary policy. It could be inflation, interest rates, or a change in the risk-free rate of return. So we express this as the expected return of a stock is equal to the risk-free rate of return plus the beta for the stock times the expected return for the market, okay, minus the risk-free rate of return, okay? So you got to look at that. And then this has to be in parentheses, the expected return for a stock, the expected return for the market. Okay. That's step one. Simple. Okay. Step two, okay, and this has to do with the Fed raising interest rates. That's the first math. Simple math, I know. Okay. The second one is the present value of a stock is equal to its future cash flow over 1 plus the interest rate, the inflation rate, whatever your variable you want to use, to the n. To the n means the period. So you could do it like this, to the 1. Plus the second year, so we'll do this of year 1, the future value of cash flows in year 2 over 1 plus I to the 2 plus the future value of year 3 cash flows over 1 plus I to the 3. Okay? So on and so forth. ... Okay. So what are the variables? And let me try to clean this up. I try to do this, but it's hard with a mouse. You know what I mean? Let me try to clean that up. The expected return of the market. Okay, there we go. Minus the risk-free rate of return. Okay, cool. All right, so simple math, right? Let me move this over. That's even hard to see. Let me move that over. So there's step 1 and step 2 to how to create a recession. So let's break this down. The expected return for a stock. Okay, what stock? Any stock. How about Apple Computer? The expected return, or you could say the value, of one share of Apple Computers is equal to the risk-free rate of return. That's your opportunity cost. You could buy a share of this company, or you can just buy the 10-year T-note and earn 4% a year. So your risk-free rate of return would be 4%. Okay? So the expected price of an share of Apple Computers would be the opportunity of you not investing into Apple, but instead of investing to something else that will give you a guaranteed return, plus the beta of Apple Computer to the market expressed as the expected return for the market, which is the S&P 500, minus your opportunity cost of you not investing into the S&P 500. So the beta is how much Apple Computer tends to move more or less than the S&P 500 tends to move. So if we have a 1% day in the S&P 500, does Apple move 2%? That would be a high beta. This, you just look it up in a table, you Google it, and you get a number. It would be Apple's beta relative to the S&P 500. That's what all of this is. This is the 10-year T-note. This is the S&P 500, 10%. So if you made, for example, a 10% profit investing in the stock market, but you could have simply not taken any risk and earned 4%, then you were only compensated for your risk with a 6% real return. You understand? So we're concerned about real returns times the volatility of the Apple share. You understand like the math that's going into this? You're like, okay, how volatile is Apple relative to the market, and how much does the market move in real terms? Okay, it's not a bad model. And so what we found is the 10-year T-note went from 1% all the way to 4%. So the math will tell you as this risk-free return, as your opportunity cost, right, goes up, then the value, just using math, just math, the value of a share of that stock falls. And that's what has occurred now. If you're following along, say I. Okay. And what do you think? Does your 18-year-old YouTube live streamer know this math? Maybe they do, maybe they don't. Huh? All right. Part 2. This is where we are now. This is our future problem. This is what you need to be worried about now. I've already made money on this. Okay, great. Let's go to the second part of the recession. How about the present value of something? Well, this is money in the future, and the value of money changes depending on inflation. So if inflation goes up, which we've already indicated it has, it's the same as the RF. You could use this as inflation, or you can put in the risk-free rate of return, like a yield on the 10-year T-note. It's like what you're arguing is I versus, right, little I versus big I. They're just different variables that kind of measure the same thing. But very often an economist will ask you, well, what are you using for I? We'll want to know. But it could be inflation. It could be the yield on the 10-year T-note. So I could express this as the yield on the risk-free rate of return. I could express the math the same way, and you'd get pretty much the same answer. So over time, we're saying the risk-free rate of return is going up. Based on that, so let's just do this. Based on this alone, if inflation is going up, or the yield on the 10-year T-note is going up over time, then we know, just based on the same math that was going on up here, the present value of this asset that you want to buy is falling. That's it. Only math. But wait. We would need the second formula if it's just repeating the first formula. No. There's a key component here. I just have to express, like, if nothing changed except the I, the present value of the stock you want to buy, or the apartment building you want to buy, or the bond you want to buy, it changes. Even the car you want to buy, the piece of artwork. Hey, if you want to buy Twitter, and you could have borrowed money at 2% a year ago, but now you got to borrow money at 6%, dude, it matters. Okay? So nothing has changed, let's say, and the value of your asset has fallen. Sorry, but let's talk about the second wave of the stock market. Somebody says, what number? Who cares about what number? Okay, the market will tell me when we're there. This is a timing issue. So let's talk about, again, we'll call it Apple Computer. Okay, let's say this year they make $1 billion in profit, let's say. But next year they make $900 million in profit. And 3 years from now they make $800 million in profit. This is going to fall even more. Future income and future profits are falling. And the value of the future profits are worth less. So $1 billion this year in real terms might be less. It might, in real terms, might be 900 million. But 2 years from now, 900 million with, right, would be in today's terms only worth 700 million. And 800 million 3 years from now with higher inflation and lower, right, is only worth 500,000. And you might look at that and say, oh my God, profits are going to drop by 50% in real terms. And then you get a really big down. And we call that recession. Okay. Of course, I'm right. But Jess says, and he was blocked, but it says that's why investing is bullshit. No. Investing's divine. Investing makes me filthy, stinking rich. It's awesome. You just got to know the game, man. You got to know how the market works. So when your financial advisor tells you that your diversification is going to save you and market timing's bad, you need to fire that person on the spot. Oh, you could never know the market. Nobody can predict the market. That is stupid. Do you understand that? What do you mean you can't predict the market? That is ridiculous. As soon as you saw that interest rates were going to go up based on high inflation, not because of other stuff. See, there are times when just everybody's making money kind of stuff, and we have sort of there's good inflation, bad inflation. Did you know that, by the way? There's good inflation and there's bad inflation. And so sometimes there's good inflation. Well, you know, when you realize, we got some bad inflation coming, well, maybe you should triple leverage short the stock market. It's only math, dude. Now, if you hired someone with a sports marketing degree to manage your money, and that person listens to somebody on TV with a journalism major, and together they're managing your entire net worth, you're the one with the problem. But there is such thing as good inflation and bad inflation. Let me just show you something to maybe think about. I spend a lot of time on central bank websites. We'll go to the Bank of Japan. Okay? And check this out. Let's go right here. Bada bing, bada boom. And let's see. La, 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 la. Okay, look. Quantitative and qualitative monetary easing with yield curve control. Wayne, help me with this. What does that mean, Wayne? Good inflation and bad inflation. So they want the good inflation provided by the weak yen, but they don't want the bad inflation created by high energy prices. Also, they have discovered there's a shortage of US dollars, and it's causing massive problems for them. Okay? You know, I'm on this website, once a week, twice a week? So for those that have never even been to the Bank of Japan website, once again, you're doing things wrong. You don't get it. Okay? There's more. That's the missing piece. I'm showing you the missing piece. Okay? So It's 10:31. It's time for me to go. I'm going to post this link one more time. This is your last chance to take a sneak peek look of everything that you're missing and what's going to fix you. Now, you're going to have a lot of questions. Don't worry about it. There's a lot of stuff coming. This is not even announced yet. So hurry up. This is the piece you're missing. I'd like to thank FXStreet for hosting me for the 198th time. Hosting this live stream 198th time. I'd like to thank the moderator for moderating better than any moderator has ever moderated before. I'd like to thank you for staying the whole 3 hours. I appreciate that. I invite you to join tradersway.com, an ethical and trustworthy broker. I invite you to join FXBootcamp.com, where you can learn how to trade. And lastly, click the link to the super secret fundamentally based alert service. Otherwise, in the future, you're going to have to pay more money. But even worse than that, 1 year from now, you'll still be disappointed with your results because you still haven't plugged the hole. You know there's a missing piece to your trading. So why don't you do something about it? I put big money into it. You can put a little money into it. It's not going to hurt you. But it might actually fix you. Cheaper than Harvard, I would say. So peace on earth. May the pips be with you. May our profits be above average. Have a wonderful weekend. You deserved it. But don't forget to review your charts, identify your strengths and weaknesses, and develop a plan for next week on how to improve. If you're in my day trading group, I will see you Sunday night because Monday's too late. Think about it that way, guys. If you're not in my day trading group, you show up on Monday and you're like, what's going on, fellas? Where's the trade? We're going to destroy you because we're already prepared and we're already in the trade before you're even out of bed. Ha ha ha! Ha ha! Oh, that's a good cigar. That's a good cigar, Anthony. That's killer. Enjoy. That's thick, though. Love it, though. Love it. Peace on earth. May the pips be with you. May our profits be.